So good afternoon, ladies and gentlemen, and thank you for joining us for today's webinar. My name is Erika Musizana. I work for Access to Finance Rwanda, and I'll be your host today, and I take this opportunity to welcome you to this conversation. This webinar has been organized in partnership with SPARC as the implementing partner of the Irish Potato Value Chain Financing Project, a project that started in 2018 and it concluded in 2020. And it was funded by Access to Finance Rwanda. The project's aim was to actually support the aim was to improve access to financial services for smallholder farmers, enhance productivity, income, market relations, and job opportunities. This webinar is organized under the theme of improving access to financial services and livelihoods of Rwanda smallholder farmers with the purpose to increase access to financial services by enhancing productivity, income, job opportunities for Irish smallholder farmers in Rwanda. I would like to take this opportunity to express my gratitude to SPARC for accepting to collaborate with us in the organization of this important event. This webinar is organized as part of Access to Finance Rwanda Learning Agenda, which will engage participants in stimulating discussions on a range of topics pertaining to pressing issues in Rwanda, Rwanda's journey to the financial sector development and economic transformation. Before we get started, let me share with you the general housekeeping rules of these discussions. We kindly request you to please let us know through the chat box your names and the institution you are representing today. In order to avoid background noises and echo during the meeting, we recommend that you stay muted when you are not speaking. Then we'll be receiving questions via the chat box during the panel discussion. And I will bring them up during Q&A session. Please remember to mention your names and the panelists your question is addressed to. This webinar will be a video recorded, and the video will be available on AFR and SPARC channels in about 48 hours after the discussion. Then before we start, I would like to take you through the agenda. The agenda item number 1 will be to provide introduction and welcoming remarks by FR Country Director, Jean Bosco Iachu. Then it will be followed by a summary of SPARC the project implemented by SPARC, the Irish Potato Value Chain Financing Project, the key achievements, results, challenges, learnings. It will be delivered by Mart Poe, the outgoing SPARC Regional Program Director in the Sub-Saharan African region. Then we will have the moderated panel discussions where the keynote speakers will be responding to questions from the audience. Today, we are privileged to have the panelists who have that experience in the financial inclusion for smallholder farmers. We'll be joined by Equity Bank, represented by Belize Mugwaneza, and she'll be discussing the partnerships in the digitization of agriculture value chains for financial institutions. Then we'll have SPARC represented by Madame Sylvie Bambara, who is the Agribusiness Program Manager, and he'll be discussing topics related to business training and coaching, then support in digitizing agricultural value chains. Then we'll be joined by Mr. Jan Vos, who is the CEO and the founder of the Money Fund, a fintech company, who will be sharing insights on the fintechs in digitization agriculture value chain. So then we'll have RCA represented by Pacifique Mugwaneza, who is the Cooperative Inspection Division Manager, who will be discussing the role of government to support development of cooperatives and impact of the reforms on the cooperative business. After that, we'll have open discussion and the Q&A session. Then the webinar will be ended by closing remarks by the SPAC current regional program director in Sub-Saharan African region, Waringa. Before we continue, I would like to request the representative of Belize to say hi to the audience. We can't hear you, Belize. So let me go to Sylvie Bambara. Could you please say hi to the audience, please?
Hi, everybody.
Thank you, Belize. Then Jan, can you say hi to the audience?
Oh, hi, everybody. Eric, thank you for having us here today. Pleased to be there.
Thank you, Jan. Pacifique, could you also please say hi?
Yes, hello, ADK. How are you?
Thank you, Pacifique. Happy to have you today. Then I will ask Waringa to say hi to the audience.
Hello, everybody. Good to have you all in this meeting. Thank you, AFR, for your partnership, and I'm looking forward. Thank you.
Thank you, Waringa. Then Mart.
Yes, hi everybody. Great to be here, and more importantly, great to see all of you here. And I look forward to the webinar.
Great to have you today, Mart. So then, without further ado, allow me to welcome the country director of Access Finance Rwanda to say hi also, but also provide introduction and welcoming remarks. Welcome, Yachu.
Yes, thank you very much, Eric and Spark, the team behind all these achievements. Mine is quite simple, and it's really making introductory remarks and leave enough time for the conversation, which is long awaited for. I just wanted to share with you the journey we started, a few years back, really, in Rwanda, trying to promote value chain financing models, and this was informed by the current status. I know most of you are already aware that in terms of financial inclusion, we have reached as a country 93%, both formally and informally served. But when you look at the numbers and assess them deeper, you find that we have some sectors that are still starved of financing. And among them, we have the agriculture sector. Apart from that, we have also individuals that also are still struggling in terms of accessing and using financial services. And majority of them are smallholder farmers that really, and that are located in different rural areas of Rwanda. So it's very important that whoever is working in this space in terms of supporting financial inclusion and the financial sector development doesn't forget about the smallholder farmers that are contributing a lot to the GDP, but they are still starving in terms of credit. So now we have tried these models, and we have looked at different support functions that would be needed. And we tested these in the Irish potato value chain, in the dairy, coffee and tea value chains. And we are so glad to say that today it's the first among many that will come and will follow as part of a lead series. where we share learnings, but also discuss different approaches that would be adopted going forward. I mean, I must say that Spark was the pioneer in this space, really understanding the Irish potato value chain, but also testing some models. We have learned a lot. It was a long journey, but quite rewarding because, as you hear from the panelists, but also from Spark presentation. Now, I want to echo, as we discussed, really, that we wouldn't have achieved whatever we have achieved without leveraging technology. That's why you hear in this particular conversation, we have the presence of FinTech, just to share some insights and what they have learned here in Rwanda, but also across the globe. We had a very good element around capacity building, which is quite key in terms of if you want to sustainably provide financing. People need to understand, people need to know what is available. And then some element around strengthening the value chain as it is to ensure that we are providing adequate services. And it's been a learning curve because for all of us, be it the development partners, but also the private players such as banks, especially in this case, equity. And we shall hear of that in more detail. So I wanted to stop there and thank you all, panelists, Spark, but also the participants in this conversation. We are always glad to see you, many. I see 48 people here already. And we look forward to continuing these conversations. So we welcome your thoughts and your suggestions for us to continue supporting the financial sector. So I wish you all a productive conversation. Thank you.
Thank you very much, Iyad, for the brief and very clear introduction. So you clearly say that, you know, smallholder farmers, they contribute to the GDP, and also they are driving force for the country's economic development. So there's a need really to think about, you know, supporting them have access to financial services and credit for investment. At this moment, allow me to welcome Mart Poe, who will be sharing the summary of the project we are talking about, the Irish potato value chain financing. I kindly request you, Mart, to use the 15 minutes allocated to your presentation so that we can also allow more time for other presenters to share their insights. Thank you.
All right, thank you very much, Eric. Can you see my screen?
Yes, we can see your screen.
Okay, great. Well, first of all, a warm welcome to all the participants of this webinar. On behalf of the whole Spark team and its partners, we are very thankful that you are here. We hope you gain relevant knowledge that will help you also in your efforts in increasing access to finance for the underserved people. For those who don't know Spark, let me quickly give you some background information. We are an international NGO founded in 1994 as a response to the war in Eastern Europe. We operate in 15 countries, mainly in the Sub-Saharan African region, Northern Africa and the Middle Eastern region, and also partly in Europe, where we serve the refugees from those regions. Our key objective is always to create jobs, and we do that through entrepreneurship in the widest sense of the word, and education. So this has resulted in over 10,000 scholarships provided, more than 100,000 youth that have been trained, over 7,000 startups and existing businesses have been supported. And this resulted in 26,460 jobs that have been created. Today we are here to share knowledge on financial inclusion, and mainly through the implementation of the Irish Potato Value Chain Financing Project, also called IPOVAF. The project goal was to increase access to financial services, to enhance productivity, income and job opportunities for Irish potato smallholder farmers in Rwanda. We worked in the northern and the western provinces with 64 cooperatives over the last 3 years. Of course, we could not work alone. So as mentioned, we worked with Access to Finance Rwanda, was the funder, the initiator, but also continued to advise and work with us to make the project a success. The second very important partnership was with Equity Bank, who came on board and really transformed their agricultural ambitions into reality. And I'm impressed by how quick they can move, which is a great partner to have. Last but not least, our partner Moneyphone, who is a long-term partner of Spark, where we work with them in Jordan as well. They really understand the financial need, the financial institutions need on one side, but also they develop products that fit with the nature of farmers or other, let's say, more fragile groups. So without them, we could not have made it such a success. So thank you for that. Why did we do this project? Well, I think most of the people who are here, they know that around 72% of the Rwandan population is active in the agricultural sector. So any intervention in that sector will help to develop the economy of the country and contribute to food security. However, the lack of access to finance is still a big problem. Many financial institutions perceive farmers as a very risky group to serve. That leads to farmers not being able to get credit, not being able to buy the right inputs or making investments that could help to achieve a higher productivity. So lastly, why did we choose then the Irish potato value chain out of all of them? I think I'm not the one to tell you, but Rwandan people, they love potatoes. I think they eat it almost every day. So it's a very important stable group for many households, and nearly 1 million people are involved in production and sales of the Irish potato. So any intervention in that value chain will impact a lot of people. Before we go to the more technical details of the project, I want to introduce to you Hilary Kanyanjim. She's been farming since 2017 in the northern province of Rwanda. And through this project, she received business skills training and coaching. She also really increased her financial and digital literacy. And based on her historical production track records, she was able to get a loan of only 40%, whereby the previous available products for her were only 24%. And she applied for this loan through her phone, as you can see on the picture. This saved her time and money on traveling. There were only 3 weeks between the moment she was applying, with the moment this picture was taken, and the moment she got the cash, the credit, the money that she needed. From that money, she bought quality seeds, pesticide, and labor. And she currently employs 5 people who are cultivating and selling not only Irish potato, but also maize and beans. So I want to invite you all to keep her in mind during this webinar. So how did we work on financial inclusion? The project was really based on the principle of cooperatives as key drivers for rural economic development. So if you look at the first point, it's really important to create well-organized, strong cooperatives. So this relates to governance, leadership, organizing general assemblies, having transparency in your money flows, having good bookkeeping systems. And secondly, the cooperative really needs to operate as a business for any financial institution to consider them. So you have to be connected to the market. We really worked hard on developing business plans, implementing those, finding new ways of finding revenue, such as being a seed multiplier or agro dealers, and having contracts with market players, such as suppliers, buyers, but also financial institutions. These 2 elements really need to be in place before you can move to access to finance. I think this is already a challenge, and most more general cooperative programs, they stop there. They stop at these 2 elements. In our case, 57 out of the 64 cooperatives were able to reach a certain mature level. And with them, we created the bankable data collection systems. which are fully owned by the cooperatives. As I think maybe some people don't know, the Irish potato value chain is quite organized in the sense that the potatoes go through the cooperative. So, you know, cooperatives can now keep track of how many kg and which grade each individual member supplies through the cooperative. If we go to number 4, we see that the financial institutions showed really great interest in this kind of data, and they even stated, hey, this could replace some of the traditional collateral requirements that we have. And then Equity Bank came on board, who was even able to quickly develop tailored products specifically for the smaller farmers based on the data. Moneyphone came in to develop the digital platform for the loan application in such a way that it really provides the KYC, the know your customer information from the bank, but also that is still user-friendly for the farmers. However, then I don't think that is enough yet. Like if you go to number 5, you will see increased understanding, trust, and uptake. There are still very many cultural beliefs, or maybe I should say disbelief towards, distrust towards digital solutions. So we really worked with our proximity coaches and digital youth fellows to work on digital literacy, but also to really show that you can trust the phone, that there's a proof, that there's a gain, a benefit for each farmer to start collecting your data, to start opening a digital bank account, and to apply for a loan and actually get it. And these digital youth fellows and proximity coaches are people who are placed at the cooperatives. They're even originally mostly from the same area. So they have a long-term trust relation, they know each other. This is very crucial. Allow me to quickly zoom in on how did we then lower the interest rate for this specific loan. If you look at number 3, you can see the transaction costs of manual products are really high. This is due to labor-intensive processes, paper-based administration, cash-based disbursements. You can imagine a loan officer having to go to visit the cooperatives, collecting the papers, having to go back, copying, scanning, reviewing all the documents manually. When you move to digital, these processes and administration become automated, and even the disbursement goes through the phone. So you reduce a lot of cost as a financial institution. Therefore, you can reduce the interest rate while still keeping a profit as a financial institution, which is of course needed as well. We've seen that this lowers the interest rate by 10% or even more in some cases. When you look forward, it's really important to have the right responsibilities when you develop a digital loan product, beyond project, of course. Here you see Moneyphone is really responsible for the platform, for the digital loan onboarding, but they do that under the radar. So the farmer, when they apply for the loan, they see Equity Bank in this case, so not to confuse them. Then Equity Bank, as its core business, works on the credit scoring with their knowledge of responsible lending, making an offer that fits with the farmer's historical production records, then disbursing the loan, and of course, eventually collecting the repayments. The individual smaller farmer is responsible for knowing its own historical production records, for applying for the loan, and eventually, of course, to repay the loan. The cooperative has really a central role in this system, whereby they verify whether the data provided is correct, as they have this in their systems. And also the cooperative plays a role as a guarantor. Then you see Spark in dotted lines. So we have a temporary role whereby we have provided a loan guarantee fund to unlock the potential of serving smaller farmers. As I said, they are perceived as very risky, so it's very hard to immediately convince the top management of a financial institution to invest in this when they have not seen the proof. So we de-risk the first and the second rounds, and then the financial institution can see, hey, the farmers are repaying back as with a normal default rate of 3 to 5% on our total portfolio, and then top management invest and say we can scale up without any loan guarantee funds. So it's really a temporary unlocking mechanism. I will very quickly run you through this. Details of the product. So the length is 6 months and the repayment is at once to fit with the harvest season. The interest rate for 6 months is 7%. The amount is 100 to 300,000 won francs. The time between the application and disbursement, as I explained with Hillary, is only 3 weeks. And the scoring mechanism is mainly based on the farmer's historical data of 2 consecutive seasons and the cooperative guarantee. So I've been able to give you an overview, I hope, a bit of the basics of the project, or the approach, the base of the project. Allow me to mention some key achievements. We trained over 7,000 individual farmers on governance, leadership, business skills. And we have seen an exceptional growth of 15,000 farmers to almost 27,000 farmers who are now members of the cooperatives. And that really increases also the business opportunities of such a cooperative. Out of that, we've seen that 57 cooperatives really have grown in terms of their business capabilities and are collecting data now. So I would say that's the ones you can really work with at the moment. Farmers have really changed their mindset towards digital solution uptake. For example, we've seen that 2,639 farmers opened digital bank accounts. As I said, 1 new digital loan product was specifically designed for the smaller farmers and launched. And currently 296 farmers have received the digital loan with a total value of almost 83 million. This is a pilot, so we are here together with you to scale this up further. Let me highlight 2 achievements on a bit higher level. We've seen a huge increase in production supplied through the cooperatives. Here on the slide it says IPCC. This is the Irish Potato Collection Center, which is the same as the cooperative. So from 15,000 tons to over 400,000 tons in 2020. So that is really wonderful. When it comes to jobs, we have seen 718 jobs that have been created, which always makes us as Spark very proud, of which 94 are formal jobs. These formal jobs mainly came through our partnership with Rwanda Cooperative Agency, RCA, to help the cooperatives to recruit certified accountants. Cooperatives pay them, so it's not a temporary intervention, but we help them in matching and in this process. So when it comes to the impact, I think any intervention that is done successfully on financial inclusion for the farmers really contributes to food and livelihood security. It increases the productivity because people can buy inputs, labor, even make bigger investments in the technology, and it makes the sector more attractive for people to work in. Also, the financial sector really benefits from it because they increase their awareness of smaller farmers, how they work and how they can serve them. They are a large population, many financial institutions wish to serve them, but they just don't know how yet. So before I close, I wish to share a few lessons learned. We learned really that digital pathways can lower the interest rate for vulnerable groups, and that bankable data can really replace collateral requirements that they cannot meet simply. Secondly, I believe that especially development partners and public partners should really continue with changing the mindset, establishing a behavioral change to our digital tools. This can be done, in our case, for example, it was done through role models from the community themselves. So that is not just this big gap with the city people, but that rural people showcase how they can benefit from it. Cooperatives have really proven to be the key driver for financial inclusion in this case, but only if they are organized well and connected to the markets. If you're just a cooperative, that won't do the job. Finally, what we can see in many other products is that the credits are earmarked. So you have to spend it on input, you have to spend it on ABC. In our case, we did not say to the farmers, you have to spend it. We truly believe farmers are well capable to decide themselves what they need, whether it's input, labor, to make it a successful season. A few more lessons learned. When you want to attract youth to stay, and I think we all thinking around those lines, like how to attract youth to stay in agriculture, not all to go to the cities. It is when a cooperative becomes a business, when they make profit, when they increase their digital operations, when they diversify their business streams. And you can also see youth are more interested in roles as finance or marketing, and not so much in the production side. We also learned that it's very important to work with multiple partners who each focus really on their core business, but at the same time work in a demand-driven way with the vision to continue after the project. We are very happy to see that money, phone, and equity now have a relation that goes beyond the project. I think that is how you reach sustainability. Sorry. It is, of course, very important to work with the public partners and the policymakers. We had a good partnership with the Rwanda Cooperative Agency, both in the beginning of the project when the cooperatives were being reformed, and later as well in recruiting the certified accountants. So I think a two-way information exchange there is crucial as well. Last but not least, we learned really through this project that the web-based or data-driven solutions are more user-friendly for the farmers, on one hand, but also give the information that financial institutions need. And of course, despite, we saw really surprisingly high penetration of the smartphones, and we also saw a great willingness to share these kind of tools. Of course, it's still a challenge that most farmers don't have this smartphone, so it's important to combine it. And what we did after applying for the loan, the individual steps of the status of the loan or next steps were all followed up with text message on the individual phone. My last slide, Eric, if I may. This is a few recommendations or food for thought that I wish to share on sustainability and next steps. First of all, it's really important that all the actors in the value chain have a benefit of being in this kind of intervention. So what's in it for them? How do they gain from it? So this is the small farmer, the financial institution, and the ICT company. Private sector partners can really drive sustainability, but it needs to be with a profit in the end. Secondly, cooperatives, put them at the center of your intervention. They are really a tool to reach out to many individual farmers, and they can create the individual bankable data. Thirdly, the world is going digital, especially due to COVID. This creates a lot of opportunities, but there's also a big risk of increasing the gap for the poor. So we need to continue with digital tool penetration, digital literacy, and the mindset change. On the fourth bullet, I hope when you were listening to this presentation, you were already thinking, this is not only for Irish potato farmers, we can scale up to other value chains. We can scale up to other target groups. So that is another message I want to share. And last but not least, youth and women. They have different challenges, more difficult challenges. This was a pilot project, but for the way forward, we need to design specific interventions around leadership roles, about conditions or products for them to ensure full inclusion. Thank you so much. I hope this was useful, and I'm looking forward to the rest of the webinar. Thank you.
Thank you very much, Matt, for the good presentation and really very informative. Before I probably go to the recap of what you just presented on, I can see some more people are joining. For those who joined late, I would like to remind you that, to inform you that this is a webinar that was organized by Access to Finance Rwanda in collaboration with SPAC. And this session, we are sharing the summary project, Irish Potato Value Chain Financing Project. And it is the one actually guiding, the discussions. We would like to know who is on the call, and we really urge you to post your questions in the chat box. They will be discussed during the presentation. I noted a few things in the presentation of Mart, and one of them is that I mentioned that agriculture sector is the backbone of the Rwandan's economy, and it employs really the 2/3 of the population. Also, smallholder farmers contribute to the GDP, almost 34%, but there's still lack of access to finance, which remains to be really a major constraint and prevent smallholder farmers from having access to appropriate financial products. You also mentioned that the selection of Irish potato value chain was based on a number of factors, one being that 80% of all the food consumption as an important staple crop. It really has food security aspect, and I know it was selected by the government of Rwanda to be really among the staple food crops that will contribute to the food security. So in order to address some of the key issues in financial inclusion for those smallholder farmers, SPARC is in partnership with the Money Fund and Equity Bank, who is involved, who is really active in financing smallholder farmers to come up with innovative, digital loan products so that, those bottlenecks, those challenges can be tackled in a more appropriate manner. Also, it looks like there is a number of other factors. I will also mention that there are other support functions, like the capacity building in different areas, ranging from governance, leadership, and business skills, which is very key really to make cooperatives strong and become more attractive to financial institutions. Also, you mentioned that there has been the growth of cooperatives from 15,000 members to almost 27, which shows that really there is a value proposition that these farmers are seeing to adhere to the cooperative. In terms of sustainability, she mentioned a number of things. Most of them really is to engage the youth in participating in this kind of digital related loan products to smallholder farmers. Allow me to quickly go straight to the panel discussion. I have questions that I want to ask, the panelists. My first question will go to Equity Bank, Madame Belize. We know Equity Bank is really active, is one of the banks, one of the commercial banks who are active in the financing smallholder farmers. So when we're talking about the financial inclusion in Rwanda, would like to know what this means to the Rwanda journey in its implementation while serving smallholder farmers from your perspective. We would like to know, where do you position yourself in the near future? What are the challenges that you are currently facing and the solutions that you're proposing to overcome them? Welcome, Belize.
Thank you, Eric, and hi, everyone. As Eric said, I'm representing Equity Bank Rwanda, so I'm in charge of agribusiness at Equity Bank Rwanda. So when we talk about financial inclusion, even from the country perspective, it's an enabler to achieve development and also poverty reduction. So, and then for us at Equity Bank Rwanda, our mission is to transform lives for people. And then we are transforming lives of people by availing customers' products to respond to their needs. So then for Equity Bank Rwanda, in regard to agriculture, so From a bit of background, Equity Bank Rwanda is a Kenyan bank which started in 1984 as it was a cooperative, and then mainly dealing with vendors, smallholder farmers. And then it grew. It turned from a cooperative to a microfinance institution, and then from microfinance institution to a commercial bank, and then now we are a regional bank. We're a regional bank present in Rwanda, in Kenya, Tanzania, South Sudan, DRC, Uganda. So when the bank, when we're looking at the importance of agriculture in our country, in Rwanda, because you know agriculture is contributing to the GDP at 30%. So then at the time, that was in 2018, when the bank looked in our book how much work we're doing for agriculture, we found at that time we're not doing much. So we're doing like 1%. But when you look at our background, also the group in Kenya, you will see we're doing a lot into agriculture. So then they said, what can be done for Equity Bank Rwanda as well, so that we can play an important role into agrifinance. So that's how come. Then we said what can be done, and then the first step that was in late 2018. It was to create an agriculture department within a commercial bank, something which is not usual, because we said agriculture is special. It has its own dynamics. So for us to be able to finance agriculture, it has to be done by people who understand the mechanisms and the dynamics happening in the agriculture sector. So that's how the agriculture unit was created in 2019. And at that time, we're just at 1%. When you look at our book loan, so the agriculture was playing only 1%. So, and then when the agriculture unit was created, so then the bank said, now we have an agriculture unit. We have agri officers. We have people who understand agriculture, who's going to help the bank to move it to another level. And then, so now after creating the agriculture unit, now it was time also to look for different partnerships, because you know when we're all the time discussing agriculture, agriculture is having its own dynamics, own risks. So it's not something as a commercial bank, which something that a commercial bank will just go in alone. So that's how we started looking for different partnerships. And then one of the partnership also was SPAC, which helped us to be able to serve smallholder farmers. So, and also from the different partnership, we were able also to put in place different product according to different categories, because you have smallholder farmers, we have processors, we have traders. So as Equity Bank Rwanda, in our journey, we managed to have different products for different players in the value chain. And then for the sake of this webinar, we are focusing on the smallholder farmers, and also our work with SPAC for the smallholder farmers. So already as Equity Bank, we already had a product, a digital loan, but not for smallholder farmers. We call it Easy Loan, which it's a loan we give to salaried people, where you have to build a history with the bank at least for the last 6 months. So, and then when we were discussing with SPAC, we could find that product was not going to be easy for smallholder farmers, because when you're talking about smallholder farmers, there are people who are going to be getting money on a season basis, not every month as another business. So that's how we're very happy to partner with SPAC, because SPAC will bring in the expertise, and also they're helping us to reach the smallholder farmers easily, as rather than if it was Equity Bank going out there and then looking for every individual farmer. And then, so from there, we were very happy to partner with SPAC and also with Moneyfund, because Moneyfund was bringing us a platform which is helping us for farmers, for us to access the data, because that's mainly which has been an issue for sometimes for commercial bank to be able to finance for smallholder farmers, because there's lack of data, there's that lack of historical data. And then with the money fund platform, we're able to get the data and also to be able to directly also work with cooperatives. So then also you asked where do we position ourselves as an equity bank, and also, sorry, let me go back a bit. With our partnership with Spark, we were able to give loans to 296 smallholder farmers, and with the loan with the value of almost 83 million Rwandan francs. That is only one season. Now we started disbursement last year. Now it's almost the time for the farmers to start repaying, and we are very keen to see to get lessons from how the product will peak, where we peak in terms of repayment capacity, also on the NPL on the default rate. So we are very keen because it will determine how we're going to scale up the product, because we started with only Irish potatoes, but as a bank, we are focusing on 8 value chains. So if this project is a success, it means we will able to scale up also to the other value chains, because now we are talking about also for maize, for rice, and also for people in dairy. So we are very keen to expand it, but depending on this project, we have concluded with Spark and Manifold. So, and then in terms of where we are, how we are positioning ourselves, because I said when we started the agriculture unit in 2018, the agriculture was representing only 1% of our book loan, but now currently we are talking about 5%, so which is more than 8 billion Rwandan francs, which is injected into, financed into different agricultural product, also for smallholder farmers. So now we have a target, like in the next 5 years, as our GDP, as agriculture contribute to more than 30%, we want also to do more into the agriculture sector. So as Equity Bank, we are looking forward to, in the next 5 years, to be able to finance at least like agriculture in our book loan will be like 30% to 35% of our book loan. So that's where we are aiming, because we want really to play a role. Because if our mission is to change the life of people, there is no way we can change the life of people by varying financial product without doing much into agriculture, where it's the agriculture sector which employs more than 70% of the population. So in terms of challenge, of course, the challenge to finance agriculture, we are talking about a section which has not been unbanked, which means you don't have an historical data with financial institution, which are already a risk for a commercial bank. Because as you know, we are trading money, we are trading depositors' money, so we are very conscious when it's about lending. And also we are talking about smallholder farmers because of the land size, so which means their investments is still very little, very small, so which comes with high administration costs with the bank. And also, most importantly, also we are talking about people who don't have enough collaterals for commercial bank. So that's mainly the challenge, and for us to be able to overcome them, we are very keen as Equity Bank to look to leverage on partnerships like the way we did with FR, with Spark. And also we are also very keen to have digital loans to reduce on the administration costs and so the administration time, so that we can reduce the turnaround time, the TAT. And for collaterals, we're having different ideas in mind. We are working with the insurance companies so that our loans can be secured using the insurance. And also we are also looking for the guarantees as the way we did with the Spark to be able to unlock this section. Yeah. So Eric, I can see you're here. I think I've taken so long. But yeah, mainly that's what we are doing we are doing as an Equity Bank. So I think now we can have leave it to the discussion, to the questions. Yeah, thank you.
Very much, Belize. You have taken long, but it was really worth it. I personally enjoyed, the insights, and it's good really to see how Equity Bank is approaching agriculture financing from really a value chain perspective. We were trying to look at different segments of the client. And it's good also to see how your agriculture loan portfolio has increased thanks to more efforts and resources you brought in by creating agriculture credit unit. So it's really something very good and to be proud of on this financial inclusion for smallholder farmers. I can see already people started to ask questions, and thanks, Matt, for responding to Manasseh's question. Other participants, really, please feel free to ask your questions, post them in the chat box. We'll make sure that they are responded to. Allow me to go straight to the second panelist. Which is Moneyfund. And for those who don't know the Moneyfund, it's a Dutch fintech company that deploys cutting-edge technology to support the digitalization of financial institutions. Mr. Yan, so Equity Bank has just mentioned that they had digital loan products before you joined, and these were focusing on other sectors. Agriculture was not part of it. We'd like to hear from you. If you could tell us about your experience in regards to the contribution and the implementation of the smallholder farmers digital loan origination. What are your success, challenges, priority, and this journey working with Rwanda smallholder farmers?
Yes, thank you, Eric. Can you hear me?
Yes, we can hear you.
I shared my screen for a short introductory movie to enlighten people a little bit. Can you see my screen and see the movie starting right now?
Yes, we can see your screen. So
what we offer is basically is anytime, anywhere origination of loans. And this really helps getting the cost of the loan down. And there's 4 components. It's the loan application platform, loan management portal, statistics, and growth marketing. And it works straight from your phone, as you can see here. So you can apply for the loan on your phone. And as Martha mentioned correctly, this means that you'll be able to get the money into your account, either on your phone or a traditional bank account or in cash, really rapid, much faster than you used to be able to in the past. There's a system, a workflow system with guarantees, and for the bank, there's a management portal. Now, what you see here is a short movie. I will go into a PowerPoint after this and explain to you what we've been doing in Rwanda. This is a movie from Jordan, where we also work with the same application. So I think you can see the presentation now, the PowerPoint.
Yes.
So the cooperation was between Moneyfund, Equity, and Spark. You just heard Belisa and Martha already explaining their side of the story. What you can see on the left is two ladies in the Musanze area in the north of Rwanda. And the lady in the front is taking a picture of the lady in the back. So this lady in the back, she's applying for the loan, and her picture is taken and it's uploaded. So she does not need to have a cell phone herself, a smartphone. She can use a traditional phone or even have no phone, but she can. The lady with the phone is applying with the smartphone for this lady. Here's another lady filling in the application herself. So you can see that she's very concentrated. We've been doing this since 2018, so it's a very young company. We do this in several countries. We currently operate in Guatemala, in Zimbabwe, Rwanda and in Jordan. And we work with banks like Equity and microfinance institutions or SACCOs. We work in what they call a SaaS model, software as a service. So you don't have to pay any huge amounts of money in advance. You just pay a monthly fee, and every month you can stop paying the fee and stop using the platform. And the fee is paid from the financial institution to money fund. So the clients, the end clients, the farmers that you see, they don't pay for it. And for the financial institution, it's beneficial because they can cut their costs. They need much less paperwork. They need less people, so they can operate much more cheaply, much cheaper than they used to do in a traditional way. And very important also, it's COVID-19 proof, obviously, because you don't have to meet in an office. You can do this. You can do this digital. You can see here on the side in Rwanda what we actually were offering to the farmers in the Irish potato farmers. You can see that the platform is available in Kenya, Rwanda. So it's also available in English, but we decided to bring it to the farmers in Kenya, Rwanda, because this is for them is the easiest language to work with. So we translated the Equity Bank loan application into a digital format, and we added the Spark historical data from the potato farmers. Now, if you look at this from a little bit more from an IT perspective, there's a loan application on the left. So that's the movie that you just saw where people apply, and this is number one. And then number two is a loan management portal. And you can basically see all the loans coming in. So every day we could see all the farmers applying for the loan, basically minute by minute. You can see that. You can see that here. You can see the names of the people, and this is a dummy. I will not show you the real names because this is obviously privacy sensitive information. On the right hand side, you can see the oversight of loan origination. So you can see the amount going up over time, and you can manage how things are going. And we also work with QR codes. Now, on the left-hand side, this lady is the manager of the manager of the loans at the bank in Musanze. Now you can see that she's smiling. She's using at this moment on the picture, she's using the dashboard that we offer her, and she really was able to process a lot of loans, nearly 300, as Belize explained, in a very rapid process, much faster than anybody had been seeing before. And at the moment, we're connecting to the to Equity's core banking system over what they say in internet language is an API. So basically, we'll automate the entire process, and this means that there will be really no time delay in getting the information and seeing the information. Now, if you know that 80% of all financial institutions in Rwanda still work with a paper-based process, you can imagine there's a huge challenge ahead of us to digitize loans. And if you know that we brought loans down to a 14% interest rate, which is like 10% lower than the going market rate, this is a huge benefit for the farmers, for the people. And if you also know that they get the loan so much faster, then you know that this is very important for those people to improve their lives and increase their livelihood. I'm very happy that we had the opportunity to do this with Spark and Equity, and this was just the start of a process that will be enhancing in the next few years. We'll grow it. The great thing about digital stuff is that you can grow it indefinitely and much faster than any human-based system. So yeah, we're really looking forward to this. We're based in the Netherlands, but I'm in Rwanda on a regular basis. I'll be flying in Rwanda next Saturday again. So if you want to meet me, just send us an email or a message, and we'll be happy to swing by to explain more to you in detail the process that we've been doing with Equity and Spark in the past actually 6 months or so. Eric.
Thank you very much. Jan for sharing the insights on how this technology works. It looks like really technology can play a critical role in terms of unlocking agricultural financing. And as I can see, is that one of the benefits that farmers are getting is to lower the loan interest up to 14%, which is really low, as you clearly mentioned. Maybe we'll come back to you after this. I would like to go straight to Spark. Spark was really a very key implementing partner on this project. And as we have seen from the presentation that was made by Mark, it seems that the project really had so many components. It was a cocktail of services that it provided to smallholder farmers to make sure that they have access to finance. I'd like to ask this question to Sylvie. The capacity building or capacity development is a critical element for the growth of cooperatives and SMEs. And we know Spark has been very active in this journey and understands clearly the market dynamics in as far as the capacity building is concerned. Could you please share your experience in regards to how business skills, trainings, and coaching approach has contributed to the success of this project, and how this has contributed in unlocking financing within the potato business?
Thank you, Eric. The project itself effectively used a number of approaches that could increase access to finance. So we had to do some assessment, individual need assessment from those cooperatives, and then see where we could mostly improve on the way those cooperatives were working. So if I can come back again and then saying how those cooperative was before, when Spark came, we found that the cooperative were facing different kind of issues, different reforms that impacted a lot negatively to the improvement or the management of the project of the cooperative themselves. So we went back working on the institutional organization. We built the capacity in there, and then also the institutional capacity building, because we needed to make those cooperatives being more competitive to the market. So we went back training them using our proximity coaching, and then also using the youth fellow. And then those proximity coaches, they were there to, they were dispatched in different provinces where we were operating. And then they are even original of those provinces. And then you could just see that those people, they know them. And then they were really very well at the right place to work with those cooperatives on daily basis. And then we coupled that with the youth, the digital youth fellows, where also we had to change the mindset of our cooperatives in the digital literacy. As you know, many of them, they were not really able to apply a loan through a digital system. And then we had to make those different processes to help them being able to do so. And then, so we had at a certain moment experiencing that our cooperative could now easily being able to negotiate the market, being able to sign contracts, and also managing those contracts, because it is really very needed when you want to prosper in the market. And then I think that IPOVAF came at the right moment, and then we are still experiencing a lot in the development of our cooperative in general. This is what I can say for now. Thank you.
Thank you very much, Sylvie, for sharing the insights in terms of the capacity building agenda of SPARC to smallholder farmers in the Irish potato value chains. Maybe before we go to the last presenter, we can, I see already some questions from the audience. There's a question to Equity Bank. The question to Equity Bank is saying that Belize mentioned that bank wants to increase the agricultural portfolio and considers the ever-changing dynamics in the sector. The question is, are there new agriculture-focused loan products that Equity Bank has? Probably I can let Belize respond. If you wish to respond via chat box, you can do so as we continue to hear from the next presenter. Also, there is another question from one of the participants called Damola Olade. I will let the concerned people respond to these questions as we continue to hear from the next presenter, but also we can come back to those questions at the end. We have another important panelist here today with us, and Rwanda Cooperative Agency, Madame Pacifique. We know RCA is a public institution in charge of regulation and promotion of cooperatives in general. And really, we understand that if cooperatives have a very conducive working environment from a policy and a regulation perspective, they can really operate efficiently. I would like to hear from Pacific. Could you please elaborate on the role of the government of Rwanda to promote the cooperative development in general, and the impact of the agricultural cooperatives reforms on cooperative members' businesses? We know there has been a number of reforms in 2018. So we want really to hear from you on what you think in terms of the impact and the role of government to promote cooperative development. Thank you.
Yeah, thank you, Eric. I think it's a great opportunity for RCA to elaborate the role of the government of Rwanda to promote the cooperative movement and what is the impact of the agriculture corps reforms and their members' daily businesses. Of course, there is a great need for the government to promote and support the cooperative movement for enabling them to achieve their goals. Maybe briefly allow me to start with giving you some numbers that we are counting now in a cooperative movement. Now we are counting more than 10,000 cooperatives, I mean non-financial cooperatives and the financial cooperatives. When we are talking about financial cooperatives, we talk about SACCOs and the other financial cooperatives which are not Umurenge SACCO. I mean other financial institutions created by non-financial cooperatives like Unity or coffee value chains. So they have their financial cooperatives created by members. So through RCA and the other institutions like local government, the government in general mobilizes and sensitizes Rwandans to join cooperatives as the way of achieving some key pillars of policies and strategies, such as grouping effort together, and increasing production in terms of quality and quantity. The government, as you asked, what is the role of the government for promoting cooperative development? Of course, government provide a lot. First of all, the government provide legal personalities to the group of cooperatives so that they are known at national or regional or international level as cooperatives, where they can even present these legal personalities to financial institutions for having finances, access to finance for doing their daily businesses. They also support them for supervising and inspecting them for knowing whether these cooperatives, they are working properly, what is kind of needs they want from government. And also, as Ma's presentation, she said that they provided trainings and coaching together with the Rwanda Cooperative Agency. It's part of the capacity building. And also, as we all know now, the government, together with the whole world, we are challenged by the COVID now. In that case, the government provide and making advocacy, and also it has set some helps. So far we have economic recovery funds, and the cooperatives, especially agriculture cooperatives, they are called upon to join these funds and get some additional capacity for continuing their activities. And also we link cooperatives to anchor farms and key developers, partners and donors. But coming back to the agriculture cooperatives, allow me to show the impact of this value chain of agriculture in general. Now we count 46.6 of the whole movement of the whole cooperative movement, which represent agriculture cooperatives. It's a good sign for the government to see around 1.1 million people, they are active, working on daily basis in agriculture cooperatives. So this value chain to the government, really it's very important for the economic of the country. And also if you relate these numbers to the other reports produced by other government institutions such as NISARA, like ACV 4 and 5, we see that these members of cooperatives of agriculture value chain, you can't find anyone in a group one, in a livelihoods, categories of livelihoods of people, you can't find any member in category 1 or 2. Means that you can use this cooperative policy as really the poverty reduction strategy, and also it's really known that cooperative movement in Rwanda, almost half the population of the country, they are working in the cooperative. So the role of governments in this value chain, of course, as I started saying that we have SACCOs, Umurenge SACCOs 416. We have other institutions created by non-financial cooperatives. We really request the agriculture value chain members so that they join this movement. SACCO cooperatives, they are banks, and they are installed, at the proximity where they work, their daily activities, agriculture, so that they get the finances, they get, small loans to continue working in their daily activities. So coming back to the Irish potatoes value chain, Of course, in different partners that we have as RCA, as government, we have SPAC, we have PASP from Minagri, we have also RDDP. All of them, they bring their capacities in cooperatives in different ways, like capacity building. We really join hands with them as the RCA, and then we provide to cooperatives the capacity building in terms of governance, in terms of financial management and the working environment. So for Irish potatoes, as you said, in 2018, we take this value chain as very crucial one in agriculture. Before restructuring of 2018, we have 260 cooperatives across the country. And this value chain has different cooperatives, of course, strong ones and the small ones. And after conducting the assessment together with the SPAC, and the PASP, we came up with the plan of restructuring the value chain. So in that case, the purpose was to make the value chain strong. The second one was to remove unnecessary levels, unions and the federation, where members of this value chain, they paid their contributions, but they didn't get the feedback from these levels. That's why we wanted really to remove unnecessary levels in between cooperatives, the value chain of this activity. Also, we, together with this PAC, we tried really to make this value chain strong, as Matt said. We had a lot of meetings, she knows, and we come up with asking ourselves, how can we make this value chain very strong? And we provide, another sustainable really help from SPAC around the 80%, and we provide around the 20%. And then we give them the accountants in these cooperatives, where SPAC paid a certain percentage of their salaries. And progressively, we set the exit strategy in these cooperatives, saying that if SPAC paid 80% today of their salaries, you need to think twice. Maybe SPAC is here like 5 years. After 5 years, it's going to close their doors. So you need to think twice. After 2 years, maybe that contribution can be reduced to 50%, 20%, until you will be able to pay your staff 100%. In a brief, what we can recognize from this value chain, Irish potatoes, now they are able really to continue their activities even without a big help from the government or the SPAC or any other partner. So we did encourage even other value chain in agriculture. We have rice, we have coffee and tea, a lot of cooperatives. We call upon them really to join financial institutions, including SACCO, so that they can be able to manage their activities on a daily basis, even without calling RCA or IFR to finance them, because they are able. If they get their production at season level, they're able to pay back the bank and continue their activities. So by concluding, the government will continue, of course, to support cooperative movement by providing needed services toward their achievement, as they say. So thank you so much.
Thank you very much, Pacific, for sharing different interventions and initiatives that the government has put in place to support cooperative movement. And really, agriculture, I can see that it is a priority among the sectors that you are trying to focus on. And this gives hope that really this environment will support these cooperatives business to prosper a lot. We go to the section of questions. I see a number of questions, and one of them is focusing on really the level of non-performing loans on the dispersed digital loans. And I think Belize has provided really a very good answer to that one. And this question is similar to what Alan Mugabe asked. And I believe the answers given are really responding correctly to your questions. Another question is from Erike Naganira, who asked that if it's possible that SPAR can engage other commercial banks. I see Waringa has correctly responded to this question. I think mostly those are the questions that we received from the chat box. If there are people who still have some questions to the panelists, feel free to send them before we go to the closing remarks of our session, which according to me really was very participative, and we got a lot of information from different panelists. I hope there is no any question that was not responded to. A question from Gasasira, Equity Bank. You mentioned that bank wants to increase the agriculture portfolio. Yes, it was also responded to. Belize saying that they have customized products for agriculture, ranging from capital investment and many more. So I think there is no any other question so far. If you allow, I can, we still have 7 minutes, but I think if we don't have any more questions, I would like to go straight to the last element of our agenda. And I take this opportunity to welcome the new SPARC Regional Program Director in the Sub-Saharan African region, Madame Waringa Kibe, to provide the closing remarks for this session. I also would like to mention that SPARC is a co-organizer for this event. So after that, we will provide conclusions of this webinar. Please, Waringa.
Thank you, Eric. Okay, thank you, Eric. I think this has been a great learning session, and I just want to appreciate the AFR team. I think it's great to be on the same webinar with people you have worked with closely. So thank you, Eric, Yachu, and the rest of the team. I think one of the things that is a continuous question when you're trying to digitize value chains like this is who will continue to pay? The coaches, the youth fellows that we were using. And I think, who will continue to keep the fintech in place? And I think Jan is here and he can speak to this. I think one of the things we have seen here, then Pacific has said that from RCA, like for the accountants that were hired, the cooperatives continue to pay them. The coaches or young fellows that support the uploading of info, I think that can be a cost for the fintech itself. In terms of the fintech and the Equity Bank, they already have a relationship and they have an agreement on how to work so that the fintech does make its money as the bank makes its money. So the issue of who pays who in the model really becomes important. And we are excited that this is really a demonstration that financing can flow when payments and production of the farmers become visible. And as PAC, we will continue to just look at sustainable models in other agriculture value chains or even other sectors in the economy. And because SPAC is focused on entrepreneurship and business and ensuring that models are sustainable way after funding is availed. So I want to say thank you to all the teams that presented. I want to say a big thank you to Marta, who led the SPAC team. And Marta, this may be the last, maybe you can put your face as I recognize you. You have led the SPAC very well. You are passionate about this project. And I just want to say a big thank you as I take over from you, really. You are passionate about this project, and thank you for your leadership. Sylvie, who was a project manager, Fidel, who's behind the scenes, organized this seminar. You may not see him, he's our head of M&E. Thank you for that. Jan, for your partnership. I think one of the things about Money Fund is the willingness to try out, to put in the effort, the money, to see that it works. And really, Jan, we appreciate your partnership. Thank you for that. Together with John Paul, who is not on the screen. Equity Bank will continue to be a partner with you. I think when you have a financial partner who is willing to risk, try out models, keep moving, we will continue to work with you together with any other financial sector players. And RCA Pacific, it's always good when you're working a market systems approach, have all the people who influence the ecosystem and who stay close to the Rwanda Cooperative Agency as we continue to work with cooperatives in the agriculture value chains. So that's all I would say for now. And each of the participants, I want to recognize our Global Program Director, Michelle, who is among the participants. And just thank you for joining us. And we look forward to other learning sessions so that the work we are doing can be replicated and expanded to many other value chains or sectors. So thank you very much.
Thank you very much, Waringa, for the good closing remarks. And I would like to really take this opportunity and thank the co-organizers of this event, the SPAC representatives. You mentioned them. There's Fidel, there's Mart, there's Sylvie, there's Waringa. I would like really to thank you very much for your contribution to make this webinar a success. I would like to thank all the panelists. I mentioned Iachu, who provided the opening remarks. I would like to thank RCA, represented by Pacific, Sylvie, Mart, Jan, and Waringa. And I would also like to thank very much all the participants who stayed with us from the beginning up to the end, and their contribution, the right questions. Also, I would like to thank my colleagues, TFR, Nadej, Emil, Leo, and Claire. And as a conclusion, as we mentioned at the beginning, this webinar was organized as part of the Access Finance Rwanda learning agenda to share the summary of Irish potato value chain financing project learnings. And the aim is really to continue engage participants in stimulating discussions on a range of topics pertaining to pressing issues in Rwanda's journey to the financial sector development and economic transformation, with a strong focus on agriculture financing. So today's discussion was organized in the framework of sharing learnings of project aims to increasing access to financial services with aim to enhance productivity, income, job opportunities for potato smallholder farmers. It was really an opportunity for stakeholders in Rwanda's financial services and agriculture to share learnings, experience in delivering digital access to finance platform in Rwanda, which is a platform that allows financial institutions in Rwanda to digitize their their loans in order to provide cheaper credit to a wider range of customers in order to contribute to inclusive finance in Rwanda, access to finance in Rwanda. We will share a copy of the key learnings from this discussion, as well as the full summary report of IPOVAF with all webinar participants, and a link to the webinar recording will be provided after here. Thank you very much. Have a nice evening, and we hope to see you in the other events. Thank you.